Hi, welcome back to my another video. Today I'm going to explain the basics of candlestick patterns, how they are composed of, how you can see its strength, and more importantly, how we see them as entry signals like pin bar and engulfing like Harami and Tsutsumi. You know, candlestick was created and developed in Japan more than 100 years ago as one of the most powerful technical tools to visualize the market. For those who never heard about it, I, as a Japanese, will briefly explain what that actually represents and how it shows and plays out in the real-life trading chart. Okay, so let's get started. In candlesticks, basically there are two kinds. One is called bullish candlestick, and the other is bearish candlestick. By the way, in Japan, we call them bullish as positive and bearish as negative candlesticks. Anyways, bullish candlestick shows the market price is going up, and bearish candlestick shows the price is going down. As you can see, bullish candlestick is usually shown in green, and a bearish candle is in red. Let's look more closely at the bullish candlestick first. When you see a candlestick like this on the chart, how you can see is that first of all, it shows that the price went up eventually because it's bullish. Where it starts is right here. It's called open price when the price first started. And then it went down once, which is called low. Then the price went up all the way to the point where it's called high. Then eventually the price closed at this closed point. These small parts are usually called wick, and the thick and solid parts is usually called body. So again, on bullish candlestick, the price starts where it says open, then it goes down to the low, then it goes up to the high, then it closes where it says close. If this were to be a 1 hour candlestick, that means that the price moved like that within 1 hour. If it's a 1 minute candlestick, then it happened within 1 minute, and so on. So no matter what the time frame is, the structure and how they are made is universal. On the other hand, let's look at the bearish candlestick. It actually shows the price eventually went down. So how you look at this is first the price opens it here, then it went up to the high, but eventually it went down to the low point, then it finished with this closing price. These are the basic knowledge of how the one single candlestick of bullish or bearish is composed of and how they are created. Now let's be more practical. When you see the candlesticks on your real-time chart, what are you able to understand about the market? Well, basically there are three things you can learn. First of all, you are able to recognize the strength of the trend in the market. How can you identify it from candlesticks? Well, you can simply tell from the size of the candlesticks. For example, look at this chart. When they are small like here on a circle, it shows the market is kind of resting and it's going nowhere. What you have to be careful is when you see the small candlesticks like these in a real time, that means it's got less energy in the market. Therefore, it's not the place where it's easy to trade, so better not to buy or sell until you see the bigger candlesticks like this appears, because it's obvious that it shows the market starts rolling here and a trend started to be created. Then you can think of where to place your entry. Oftentimes, people tend to trade when the small candlesticks are and repeat small stop losses many times and end up with a big loss eventually when they are piled up. Secondly, by looking at the candlesticks, you can tell if there is opposition and how big the strength is. For example, let's say if you see the candlestick like this. This shows that the price once moved down from the start point, but it went up. Then it pushed back down all the way here and closed within a certain time frame. What this shows is that when you see a long wick like this, that says that there is a thick wall, or what we call resistance here, meaning there is some kind of setting force. So by looking at the length of the wick, you can see how much of resistance there is. In contrast, when you look at the bearish candlestick like this, first the price started and went up, then it went down all the way and closed it here, which implicates that there is some kind of support or bull energy here as well. The larger the time frame, like 4-hour or daily or monthly, the better the reliability is compared to like 1 minute or 5-minute candlesticks. So if these were daily candlesticks, then that means most likely there is very strong buy or sell options at the resistance or support line. Let's look at another candlestick. We see these candlesticks often, but they have about the same length of wicks on both up and down from the small body. This means that bull energy and bear energy are equally merging together. You will often see these candlesticks when it's a range state. Let's say if this is a daily candlestick, it means within one day, the price went all the way up and down but eventually closed at around the same price when it started of the day. You will even see a candlestick like this, which has no body but just the pin bars on each side. This type of candle is called doji, and in Japanese that means at the same time. Because both bullish and bearish powers come across at the same time with the same power, the open and closed price will become nearly equal, and that's why it's called doji candle. The third thing that you can understand from a candlestick is that it can be a reliable signal for your entry. There is something called a pin bar, and when you see it at the top or bottom of the range zone or along with the trend line, most likely the price will reverse after the candle. For example, let's look at this chart. Like here, where the body itself is very small but it's got a long wick pointing downwards. In this case, it suggests that the price is supported here and will go up. Or if you see it at the top like this, well, this is not so reliable because it's got long wicks on both sides, so it's almost like doji, but the price eventually went down. But better example would be like this one, in which the candlestick got a smaller body and its wick pointing upwards. This is more reliable signal that implicates the price will go down from here. By the way, in Japanese candlestick charting techniques, we call them morning star when it appears at the top and evening star when it appears at the bottom of a certain range zone. Anyways, when you see the long wick with a small body candlestick at the top or bottom, then it's a buy or sell signal, because you know why? When you connect these pin bars like this, oftentimes you can actually see the invisible resistance or support lines. So I highly recommend that when you draw these lines, make sure to focus on the pin bars to connect them so that the lines become more reliable. Another important and most common candlestick signal is the engulfing, or we call it Harami in Japanese. You might already know, but Harami means pregnant in Japanese. So it's like small candlesticks or babies are engulfed or inside of one single big candle, which is a mother, so to speak. Let's see an example and how we can trade successfully based on that. Okay, these two candlesticks are inside of this one long candlestick. If you see a pattern like this, this is a reversal signal that tells you that the price will go downwards. So where is the entry point? It's when you see the price breaks out of the previous long candle. In this case, it's here. What you have to be careful though is when you see the Harami like this, the price action of these small candlesticks will most likely be very unstable. So you better wait until the price breaks of Harami, just like her children are born. Another type of engulfing signal is called Tsutsumi. Tsutsumi means a package in Japanese. So it's like when you have small items, they are packaged into one big box or case, meaning small candlesticks are packaged into one big candlestick. So this is like the opposite way of Harami. Let's look at the real chart to see how it plays out. Do you know where Tsutsumi is? Yes, it's here, because if you see closely, these two candlesticks are packaged into this one single candle. In this case, buy entry point will be where it breaks it out, just like Harami, so it'll be here. Okay, there's another Tsutsumi on this chart. Do you know where? It's right here. In this case, you place sell order here, but notice that the price didn't break out. It looks like the price went downwards, but the body of candlesticks did not break it out, meaning the close price never went below. So in this case, no entry. This is a tricky part, but whenever you wait for the breakout, don't just jump in as soon as you see the price goes beyond the line, but wait until you make sure the close price will break it out. Okay, that's it for today, and thank you for watching until the end. Please click good button if you like it, and make sure to subscribe for future videos, as I will be uploading Tokyo Guide videos as well. See you next time!